When you hear the name Warren Buffett, you think of perfection, the man who never misses, never panics, never makes mistakes. But what if I told you that several hidden decisions, ignored by the public, buried by history, and almost forgotten, nearly destroyed his empire? Mistakes so severe they could have shattered the legacy of the most respected investor on earth. Tonight we're uncovering the errors Buffett hoped you'd never study, because inside them lies the real blueprint of his success and the cracks that almost broke him. Stay until the end, because the final mistake is the one that came closest to destroying everything. To understand how Buffett became a legend, you first have to understand how close he came to losing it all. Every triumph in his career was born from a mistake, and every mistake carried a lesson powerful enough to redefine his philosophy. Buffett's journey began long before he became a household name. As a boy in Omaha, Nebraska, he demonstrated a fascination with numbers and a relentless drive to understand money. He delivered newspapers. By the time he entered college, Buffett already had a clear vision: to master the art of investing. But even the most brilliant minds stumble, and Buffett's path was no exception. Early in his career, he made decisions that could have ended everything before it truly began. Because brilliance creates opportunity, but overconfidence creates disaster. One of the most overlooked mistakes in Buffett's early career was his occasional overconfidence in certain investments. While he is celebrated for his disciplined value investing approach, not every pick was a winner. Some early ventures, particularly in the textile industry, taught him harsh lessons about management, market shifts, and the dangers of holding on to failing businesses for too long. These setbacks were not publicized widely, but they were formative. They forced Buffett to refine his philosophy, emphasizing that intelligence alone does not guarantee success. Discipline, patience, and humility are just as important. He didn't just learn from failure, he was shaped by it. Even the Oracle faced moments where timing became his enemy. There were investments he missed entirely, opportunities that could have multiplied his fortune far beyond what it already was. Berkshire Hathaway, the company that would define his career, itself almost became a cautionary tale. Originally a struggling textile company, Buffett's acquisition could have been disastrous. The textile industry was in decline, and he had to pivot strategy multiple times before transforming it into the investment powerhouse it is today. Without his ability to adapt, this early misstep could have tarnished his reputation forever. And this is where Buffett's story becomes dangerous. The biggest threats to his empire didn't come from competitors. They came from his own decisions. Buffett has always preached the importance of patience, but even he has admitted to moments of emotional decision-making. In his decades-long career, he occasionally let personal bias or sentiment influence his choices. For instance, he has openly discussed how he held on to certain investments far longer than he should have, simply because he believed in the people running those companies. While loyalty is admirable, it is a dangerous companion in investing. These episodes almost cost him substantial losses and reminded him and the world that even the most methodical investors are not immune to human error. In investing, loyalty is a virtue and a liability. Another hidden mistake that could have jeopardized Buffett's legacy is his approach to diversification. While Buffett is known for concentrated investments in high-conviction ideas, there were times when this strategy brought him perilously close to losses. By putting significant capital into a few companies, he exposed himself to market volatility and unexpected downturns. Critics often questioned this approach, arguing that a miscalculation could wipe out years of careful planning. Yet Buffett's unique insight deep analysis and confidence in his research allowed him to navigate these risks most of the time. But not every high-stakes bet came without sweat and uncertainty. Concentration builds empires, but it can also bury them. Buffett's philanthropic vision is celebrated worldwide, but even here, mistakes almost undermined the impact of his legacy. Early decisions about wealth distribution and charitable commitments required careful planning, legal navigation, and trust in long-term strategies. Missteps in timing, tax planning, or organizational oversight could have reduced the effectiveness of his donations. These near errors are largely invisible to the public, yet they illustrate an essential truth. Building a legacy is not just about earning wealth, it's about managing it wisely and ensuring it creates lasting value. Technology and innovation have also presented challenges to Buffett's traditional investing model. For decades, he avoided tech stocks, famously staying away from companies like Amazon and Google early on. While this cautious approach protected him from the speculative bubbles of the 1990s, it also meant he initially missed opportunities that reshaped the market. Critics and analysts questioned whether his adherence to familiar industries would one day make him irrelevant. This hesitation was a rare misjudgment, showing that even the oracle could struggle to adapt. When the world moves faster than the industries he knows best, even the oracle can't predict the future, especially when it arrives faster than expected. Buffett's public image is another area where mistakes could have been costly. His reputation as a humble, wise, and prudent investor is part of what makes him influential. But in the past, he has admitted to small lapses in judgment regarding communication or market commentary. Even a single misstatement can influence stock prices or public perception, potentially damaging his credibility. While he has navigated these incidents carefully, they reveal a hidden vulnerability. No matter how legendary a figure may become, public perception and market sentiment can magnify even minor errors. The human side of Buffett's journey is also filled with near misses and lessons learned. Balancing personal life with a career that demands constant analysis, travel, and public engagement is no small feat. Buffett has experienced moments where burnout, stress, or distraction could have impacted critical decisions. These hidden struggles are rarely discussed, but are crucial to understanding that even the most disciplined and intelligent individuals are subject to fatigue, doubt, and pressure. The ability to manage these human factors has been key to preserving his long-term success. Discipline builds wealth, but humanity protects it. Perhaps one of the most remarkable aspects of Buffett's story is how he turned mistakes into opportunities. Each misstep, failed investment, or delayed decision provided lessons that refined his approach. He learned to avoid overconfidence, to respect the limits of his knowledge, to remain disciplined under pressure, and to pivot when circumstances demanded. These experiences not only strengthened his investing acumen, but also enhanced his credibility as a mentor and public figure. Buffett's hidden mistakes are not just failures. They are proof that resilience and learning are central to lasting success. A mistake is only fatal when you refuse to learn from it. Buffett's cautionary tale extends to succession planning, an area where many legends falter. Ensuring that his empire will continue beyond his lifetime has required thoughtful preparation, strategic appointments, and transparent communication with stakeholders. Any misstep here could have unraveled decades of careful empire building. The oracle's careful approach shows that even the most successful figures must anticipate the future and make deliberate choices to preserve their legacy for generations. Legacy isn't built on brilliance, it's built on preparation. Before we dive into Buffett's final, and most dangerous, mistake, take 1 second to subscribe. We reveal the hidden truths behind the world's greatest financial empires, and what comes next might change the way you invest forever. The untold truth is clear. Warren Buffett's legendary status did not come from perfection, but from the way he navigated mistakes, setbacks, and uncertainty. His life is a testament to humility, discipline, and the relentless pursuit of understanding. It reminds us that no matter how successful someone becomes, hidden errors, near failures, and human vulnerabilities are always part of the journey. These moments are not signs of weakness. They are the crucibles in which wisdom is forged. Perfection didn't make Buffett great. His imperfections did. In the end, Buffett's story is a powerful lesson for anyone striving for wealth, influence, or lasting impact. Success is rarely linear. Even the most methodical strategies encounter turbulence. Mistakes, both hidden and public, are inevitable. What matters is how you respond, with resilience, reflection, and a willingness to adapt. Warren Buffett's legacy is not just about the money he made or the companies he transformed. It is about his ability to turn almost catastrophic errors into stepping stones for greater success. So, what can we take away from Buffett's hidden mistakes? First, humility is non-negotiable. No matter how smart or successful, mistakes will happen. Second, adaptability is key. Markets change, industries evolve, and even the most tried and true methods must adjust. Third, patience and discipline can save you from the worst consequences of errors. Finally, every setback is an opportunity to refine your approach, sharpen your instincts, and build a legacy that withstands the test of time. Warren Buffett's journey reminds us that greatness is not defined by perfection, but by the ability to navigate mistakes, learn from them, and use them to strengthen your path forward. His hidden missteps, near disasters, and human vulnerabilities make his achievements even more impressive. They show us that true mastery comes from perseverance, reflection, and the courage to confront your errors head-on. This was Wealth Nexus, where legends are revealed not by their successes, but by the mistakes that almost destroyed them. Subscribe, because the next story we uncover will change the way you see wealth, power, and risk. Stay informed, stay sharp, and above all, stay wealthy.